The US semiconductor market isn't just heating up, it's rewriting history. In just 3 months, chip stocks staged a jaw-dropping turnaround. Down double digits in April, up more than 30% by July. That's not luck. That's the AI megatrend in action. From powering healthcare to self-driving cars, artificial intelligence is fueling unprecedented chip demand. In this deep dive, we'll explore 7 semiconductor giants that aren't just benefiting from the AI wave. They're building it. We'll break down who they are, where they dominate, what gives them an edge over competitors, and the key opportunities and risks investors should know. By the end, you'll have a much clearer idea of which names could power your portfolio in the years ahead. First up is NVIDIA, ticker NVDA, a company that started in the 1990s designing graphics cards for gamers and has since evolved into the undisputed leader in AI chips. Its graphics processing units, or GPUs, aren't just faster, they're smarter, optimized to handle the complex computations needed for training large AI models like the ones running ChatGPT. But NVIDIA's real moat isn't just its hardware, it's the entire ecosystem it has built around CUDA, a software platform used by millions of developers worldwide. This combination of hardware dominance and software lock-in makes it incredibly difficult for competitors to lure customers away. Demand for NVIDIA's A100 and H100 chips is so high that supply struggles to keep pace, driven by AI adoption in data centers, automotive AI, and edge computing. Of course, this dominance comes with risks, particularly its reliance on AI demand and the cyclical nature of the semiconductor industry. Still, if you believe AI is the next industrial revolution, NVIDIA is the ultimate picks and shovels play, supplying the tools that everyone else depends on. But here's something to think about. If you had to invest $10,000 in just one company for the next decade, would you stick with an established giant like NVIDIA or take a bet on a smaller, faster-growing competitor? Next up is Advanced Micro Devices, ticker AMD, which has gone from being the perennial underdog to a fierce challenger in both CPUs and GPUs. AMD has made significant gains in the high-performance computing market, with its EPYC server processors winning contracts from cloud providers and its MI300 GPUs positioning the company as a cost-effective AI alternative to NVIDIA. What makes AMD stand out is its ability to deliver strong performance at competitive prices, often undercutting rivals without sacrificing quality. It's also uniquely diversified, with revenue streams from gaming consoles like Xbox and PlayStation, data centers, and AI-optimized hardware. Its biggest hurdle remains its smaller developer ecosystem compared to NVIDIA, as well as fierce competition from Intel and NVIDIA on multiple fronts. Still, AMD's steady market share, gains, and expansion into AI-heavy workloads make it a compelling choice for investors who want exposure to multiple growth engines at once. Then there's Taiwan Semiconductor Manufacturing Company, ticker TSM. TSMC is the world's largest contract chip maker. TSMC manufactures chips for industry heavyweights, including Apple, NVIDIA, AMD, and Qualcomm. Its competitive edge lies in its unmatched fabrication technology, especially its 3-nanometer process that allows for faster, more power-efficient chips. It's years ahead of many rivals in this regard, giving it an almost indispensable role in the tech ecosystem. The company benefits from long-term contracts with tech giants and the growing demand for custom chips in AI, automotive systems, and mobile devices. However, TSMC does face geopolitical risks given Taiwan's strategic location and the potential for disruptions in its supply chain. For investors, TSMC is the silent backbone of the global chip industry. Without its cutting-edge production capabilities, the AI boom would grind to a halt. Our next stop is Intel, ticker INTC, a name that once dominated the CPU market before losing ground to faster-moving rivals. Today, Intel is in the midst of an aggressive turnaround strategy, investing billions to modernize and expand its manufacturing capabilities. One of Intel's strengths is vertical integration. It designs and manufactures its own chips, giving it end-to-end control over production and innovation cycles. The company is pouring resources into building new fabs in the US and Europe, aiming to regain leadership in advanced chip manufacturing. It's also making a push into AI hardware with its Gaudi accelerators, while opening its foundries to external customers to diversify revenue. Intel's challenge is to catch up technologically after years of delays, but if its turnaround succeeds, it could reclaim a significant share of the market, a scenario that could deliver massive upside for patient investors, especially with governments eager to bolster domestic chip production. Next is ASML Holding, ticker ASML. While most semiconductor companies focus on designing chips, ASML Holding plays a completely different role. It doesn't make chips at all. Instead, it builds the machines that make the world's most advanced chips. ASML holds a monopoly on extreme ultraviolet lithography technology, or EUV, a manufacturing process critical for creating the smallest, most powerful chips. Every major chip maker, including TSMC, Samsung, and Intel, relies on ASML's machines, which are so complex they take years to build and deliver. This gives ASML an unparalleled moat and pricing power in the industry. Demand for high-performance chips means more demand for its machines, and with next-generation high-end EUV equipment on the horizon, ASML's market position is only set to strengthen. Risks include heavy dependence on a small customer base and potential export restrictions due to geopolitical tensions. But as the ultimate toll booth in the semiconductor industry, ASML collects revenue from virtually every major technological breakthrough. Next, we have Micron Technology, ticker MU, a company specializing in DRAM and NAND memory, two critical components for storing and processing massive amounts of data. Micron's edge lies in its deep focus on memory technology, allowing it to innovate faster within its niche than more diversified rivals. AI servers in particular require high bandwidth memory to handle the enormous data loads involved in training and running large models, and Micron is well positioned to supply that demand. The company is also expanding into automotive memory systems, a growing market as vehicles become more connected and autonomous. Like other memory makers, Micron's business is cyclical, with pricing swings that can impact profitability. But as AI workloads scale, demand for its specialized products is expected to remain robust. Finally, there's Qualcomm Incorporated, ticker QCOM. Qualcomm is best known for its Snapdragon processors powering millions of smartphones worldwide. But Qualcomm's story is evolving. The company is now pushing into automotive technology, the Internet of Things, and AI-enhanced devices. Its competitive advantage comes from a vast portfolio of wireless patents and its leadership in 5G technology, which makes it a critical partner for countless device makers. Qualcomm is integrating AI capabilities directly into its mobile processors, opening up opportunities for on-device AI in everything from phones to wearable devices. The company is also building partnerships with automakers for connected car platforms, a space with massive long-term potential. Risks include its dependence on smartphone sales and competition from companies like Apple, which is developing its own chips. However, Qualcomm's diversification into multiple AI-driven markets positions it well for growth beyond mobile. Looking at the numbers, this table paints a very telling picture of the semiconductor landscape. NVIDIA sits at the top with a $4.4 trillion market cap, $130 billion in revenue, and an industry-leading 70.11% gross margin, proof of its unmatched profitability in AI and GPUs. AMD, with a $280 billion market cap and $26 billion in revenue, delivers a 43.20% margin, showing strong efficiency despite being a smaller player. TSMC commands $1.3 trillion in market cap, $90 billion in revenue, and a 57.60% margin, backed by its 1.1% dividend yield. Intel, at $90 billion market cap and $53 billion in revenue, has the lowest gross margin at 29.76% and a negative EPS of 4.76, highlighting its ongoing challenges. ASML, though smaller at $284 billion market cap, posts an impressive 26.10 earnings per share and a solid 52.52% margin. Micron brings in $25 billion in revenue with a 37.33% margin and a modest 0.4% yield, while Qualcomm balances growth and income with a $160 billion market cap, $39 billion revenue, 55.68% margin, and the highest dividend yield here at 2.3%. Every figure here tells you exactly where each company stands in profitability, scale, and investor returns. So here's a final question to leave you with. If the stock market handed out an MVP award for 2025, which of these semiconductor companies would win in your eyes? Drop your thoughts in the comments because I want to see where our community stands on the future of the chip industry. And here are 10 explosive AI stocks hedge funds are quietly buying in 2025. Click on this video here.